Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a great week so far. Today we're going to be diving into our daily cryptocurrency market update, and there's some really interesting things taking place right now, and we're going to be discussing some of it in this video. We will, of course, be looking at Bitcoin, looking at the overall cryptocurrency market, going again back into some cross-market analysis, because you guys know that I believe the cryptocurrency market right now is really moving off the macro backdrop, monetary tightening from the US in particular, and of course elsewhere. But we're going to get into that all in this video. This is going to be a rather confusing chart that I'm going to show you, but this is going to show the euro-dollar futures with the Bitcoin chart, of course, in Bitcoin orange, and then the NASDAQ. As you can see, this is really what's moved these markets as we see institutions and big players pricing in interest rate hikes and adjusting and taking risk off the table accordingly. Now, we do want to see Bitcoin decouple from the likes of the NASDAQ and your sort of equities. And it's really interesting at the moment, given the kind of inflation narrative, that gold is seeing strength as a traditional, or certainly seen as a traditional inflation hedge, and Bitcoin is acting more like your equities. Reason being, very simply put, is because we have the same players in the equity space as we have now in the crypto space. And we've all wanted institutions to come on board in the crypto space for a long time. Now we've got them. Well, guess what? They're a big mover of the markets. So we're going to get into all that. We're also going to be discussing, we touched on it a little bit yesterday, but not really to the extent. And that is to do with, of course, Blackrock. Blackrock to be the primary manager of the $50 billion USDC reserve. So BlackRock are getting involved actively in the stablecoin space for the cryptocurrency market. This is huge. BlackRock are the largest, by the way, ladies and gentlemen, asset manager out there, and I don't think this can be underlooked. Also going to get into a number of news articles. We've maintained, we're very, very optimistic on the crypto space long term. Short term, however, and I've stressed this time and time again, I really don't like how schizophrenic and how the market sentiment is changing, from 12 hours to 12 hours. You have to have a more longer timescale view of things here, guys, because intraday traders, yes, they're intraday traders and they do what they do. They trade ranges. But for certainly retail, you don't want to look at the short term necessarily, although it is important. You want to really focus on where the space is going. And that's why we bring up the likes of BlackRock getting involved in the crypto space. Yesterday, we reviewed a video of Janet Yellen rather cutely explaining what Bitcoin was. I mean, that was surreal. Did you ever think you'd end up listening to Janet Yellen explaining what Bitcoin is and its benefits? But the cautious side of me is really what's going on at the moment on a kind of geopolitical scale with obviously Russia, Ukraine. You've got things happening in China. There's lots of economies sort of crumbling at the moment. And typically, we also have the yield curve inversion. Typically, this is not the breeding ground for a flourishing market, which is why I'm emphasizing and doing cross-market analysis and trying to show people we need to see that decoupling from the NASDAQ, which we're very much coupled to. And we need to act more potentially like gold and some of your commodities, which in an inflationary environment, which I think we're in, the Fed keep now saying, look, inflation's peaking, it's peaking. That's the new sort of slogan for, inflation is transitory, which we know was a complete lie and a fabrication. This is the great game, ladies and gentlemen. Inflation is a tax on all of us, and it really hurts the poorest the most, which is sickening because they are some of the people, as a society, as a community, we should be looking out for and wanting to succeed, because I've been on both sides of the wealth spectrum. I've been very, very poor growing up. Now I have a little bit of money, more than most, less than some, and I know what having no money, the kind of standard of living that brings. And yes, you can be happy with no money, and that saying is absolutely correct, that money doesn't buy you happiness, but it does in many respects. Also, we're going to talk about Elon as well, because he has quite an involvement in the crypto space. Certainly, he's the reason Dogecoin is where it is. He's now taking over Twitter, which is interesting. So we've got lots to get through, guys. Let's take a look at the overall market. We're seeing sort of a little bit of strength. We had the CPI data, Consumer Price Index for the US. We had it for the UK. We've also got the ECB, European Central Bank, meeting soon. And you've seen stocks kind of pull off on the back end of that. I think Europe's in big trouble in terms of their finances. I just don't see a way out of it. I think that is a real house of cards that is about to topple over, certainly amplified with everything going on with the Russia-Ukraine situation. And this is an article here that says Europe to see a sharp recession if Russia's Putin shuts off the gas taps. It would be catastrophic given their kind of move away from nuclear and everything, but that's a macro sort of backdrop. Let's get into Bitcoin. We did look at this weekly MACD cross, and every time historically that you've had one of these, you have actually seen continuation to the upside. And I am wondering, are we playing out similarly to here? Have your weekly crossover here. You get a kind of pullback or a consolidation phase before that continuation. Is potentially something playing out over here? It is a potential, and we are in, if we drop down to the daily, still in this ascending triangle, and we're still holding on here. But this isn't really a strong rally as of yet. It could potentially turn into one, but we need to get back above this sort of ascending or parallel resistance level that we've kind of found. It's a very significant level. You can even see when we came back below it, you know, there was a number of areas where we sort of, the candle bodies closed at it. And we have indeed held this as support. It's been a long-standing support on a number of occasions. We're not counting these kind of wicks. You know, the cryptocurrency market is extremely volatile, and a lot of liquidations take place that cause these kind of wicks. And I would really like to see this squeeze to the upside, us get back above and hold above. There's been lots of calls. One quick... TA works, guys, in the same way that we called for this as a break to the upside. We also called for this sort of 40k range based on TA. TA does work, but to a degree. And what I mean by that is TA is a probability-based game. You look for patterns, but not every pattern comes to fruition. You've got people drawing Elliott waves at the moment to the downside, looking for around about, you know, 25k, sub 30k. It is absolutely a possibility, ladies and gentlemen, certainly if the macro backdrop dictates it. But the key is in what I've just said there, the macro backdrop. If that's what pushes things right now, that's what pushes things. Forget your TA. Your TA isn't going to save you. This is why you need, and this is why every single day, and we've been doing it for a while now, we try and educate you on not just the cryptocurrency market, but markets across the board. As, again, and we'll move on to this really confusing chart that I'm going to have to explain, it's dictating what the markets are doing. So we've seen the coupling with the NASDAQ and a number of other equities. We've seen almost a decoupling from the likes of gold. You can see gold here in green. Now, why is that? Very simply, I've already explained it. It's because we've got the same actors in place. And what you've got here is the euro-dollars future. It's basically sort of like a way to speculate on interest rate hikes and then being priced into the markets. At 100 over here, this is David Bell that showed me this, by the way, the euro-dollars future. It wasn't something that I was familiar with. If you've not checked that interview out from last Sunday, please go and do so. Very smart guy. Basically, this is 100 is essentially 0, and up would be your interest rate hike. So currently, they're pricing in a 1.63% rate hike. And that's what markets are currently pricing in. Now, why is this moving the market? Well, can you see the correlation? You can literally see quite perfectly, if we look at when rates really started to get hiked in, rate hikes being speculated on, getting priced in, what does your market do? It sells off in tangent. Hope you guys can see that. You know, this is what I'm trying to educate people on. Cross-market analysis is very, very important because the cryptocurrency space no longer just exists in its own bubble that is moved by the 4-year cycle, the 4-year halvening. However, that is still, in my opinion, very humble opinion, going to play a role moving forward, of course, because there's a supply shock. So when we're looking at the Fed and we're looking at a number of other things, we actually didn't almost want inflation to be high, which is rather ironic being a Bitcoiner. Not a Bitcoin maxi. I love Bitcoin. I've been in it for a long time, and I think Satoshi's vision was a real one. Bit suspicious on who Satoshi actually was, and I think that's something that many Bitcoin maxis just completely ignore. And I have my own views on that, but that's for another video potentially. And you can see when we talk about interest rate hikes, really what we want is low inflation, so the Fed don't more aggressively up interest rates. As we know, the market has only priced in what they've already set out. So if we got emergency rate hikes and stuff like that, in my opinion, that would be very detrimental for not just the equity markets, but the cryptocurrency markets. Also today, if you keep an eye on the likes of, there's just so much I can cram into these videos, guys, but I try and keep them sort of short and sweet. If you look at the likes of oil's climbing again, natural gas is climbing again. It's all sort of climbing again. And markets right now, in my opinion, are kind of breathing a sigh of relief, but ultimately are going to be dictated by the macro backdrop based on what I'm showing you right here. You can see it's no coincidence, even here. Look at your rate hikes. So you got your 25 basis point rate hike priced in. Look what your markets did. They saw a rally on the back of it because they're kind of going, okay, well, this is the route that we're going down and we kind of know what to expect. any kind of a tipping of that balance, I think is very detrimental. And I'm going to certainly be watching what comes out of the ECB's meeting. Like I say, and I love my European brothers and sisters. I have many family that are in Europe, but I think the euro is in big trouble. And I think there's a lot of reasons for this. I've been looking a lot into the repo markets, which nobody seems to really understand what the repo markets are. So maybe we do some videos on that. And things just don't look great for the Eurozone. So this is really all of what we're watching. Onto a little bit of news now. Of course, Blackrock is going to be getting into the crypto space. This is another tweet from Blockworks. I like Blockworks. Some people don't. I do. And essentially, Justin, Blackrock CEO, says they're increasingly seeing interest from clients in crypto. Of course, crypto is the new thing, guys. It's here to stay. And when I tell you that you're early at a $1.9 trillion market cap, we've not seen anything yet. I always remind people that we had a $5.5 trillion market cap in the dot-com boom. And that was back in 2000, the 2000s, or it was either 1999 or 2000. One of those years it reached $5.5 trillion. That was back then. $5.5 trillion today, let me tell you guys, gets you a lot less than what it did back then, even though they've told you inflation's only at 2%. Inflation, in my opinion, is well over the real stats, not the ones that they manipulate, is well over 10, 12, 13%, in my opinion, if you look at Reaganomics. We've got Francis from the Market Sniper coming back on. Hopefully I'll release that video on Sunday. You know, lots of very, very knowledgeable guy that's taught me a lot, and I know you guys are going to greatly benefit from it as well. Jamie Dimon seems storm clouds ahead of the US economy later this year. Again, back to why we're cautious. Europe sees a sharp recession due to gas, something we're really watching, and natural gas is still going up in price. Elon Musk offers to buy Twitter for $43 billion, so it can be transformed as a private company. I almost feel like Elon's just trolling the SEC at this point. I'm still working out whether he's been a net positive or negative for the cryptocurrency space, because in my opinion, and I got the Dogecoin call wrong because I never really took into account potentially the power of a meme, which I should have. You know, I think Dogecoin is very, very unimpressive in terms of a crypto. I've been in crypto for years. I've followed the evolution of the cryptocurrency space. And as a blockchain, Dogecoin is very unimpressive. They don't even have their own mining, and essentially they're just a copy of Bitcoin. However, and their inflation rate is ridiculous. However, due to Elon, it's where it is. And I think there's a lot of cryptos actually that deserve that spot other than over Dogecoin, because there's a lot more impressive things taking place in terms of technology. However, what do I know, guys? At the end of the day, the market's going to price in what the markets are going to price. That's just my own personal opinion, and clearly the markets think differently. And it's a huge, it's just insane. Somebody told me this the other day. I was having a conversation with somebody. More people in the United States own Dogecoin than Bitcoin and Ethereum. I don't really know what to say about that. But if that's what it is, that's what it is. Ultimately, money is the loudest in the room. You know, if money talks. And that being the case with Doge, even though I do think it's a very unimpressive blockchain. I know I get hate for saying that, but at the end of the day, guys, I'm going to be as truthful as I possibly can with you guys on this video. On these videos, I should say, and on this channel. So that is really all I have for you in this video, guys. If you have enjoyed this content, I hope you leave me a like and a comment. It really does help the channel out and the algorithm. And also, if you're not already subscribed, quite a few of my regular viewers aren't subscribed, please do so. And head over to my Twitter, guys, @RealAllInCrypto, because we post critically thought out tweets like this, not just random generic BTC is going to explode or AID is going to go to the moon or, you know, stuff like that. We actually post thought-provoking tweets. So @RealAllInCrypto is my Twitter for those of you that want to go and follow me over there. That is all I have for you in this video, guys. Thanks a lot for watching, and I will catch you all in the next YouTube video. Have an amazing Thursday, ladies and gentlemen.